Today we're going to talk about California CDTFA sales tax audits, how to avoid fraud penalties and criminal tax exposure. Well, admittedly, most California sales tax audits begin as straight-up civil examinations. But civil at the start does not guarantee civil at the end. If the sales tax audit reveals altered records, false resale claims, or sales tax that was collected but never remitted, your case can quickly become a fraud matter, or even a criminal tax investigation and prosecution. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney CPA, and I'm the owner of the tax law offices of David W. Klasing. To date, we have over a dozen locations across California and 24 locations across the United States to serve clients nationwide. Today, I'm going to explain how CDTFA audits work, which issues create the greatest risk, and how to keep a civil audit from escalating into something far more serious. So, what makes California sales tax audits dangerous? Well, CDTFA auditors typically compare your books and records, your reported sales, your income tax returns, the sales tax you collected, and resale transactions. The real danger begins when the records do not reconcile cleanly against the explanations given, especially if the explanations appear to be engineered rather than accidental if they're wrong. So what are the high-risk fact patterns here? Certain issues create significant criminal tax exposure in California. These include collecting California sales tax and then failing to remit it, utilizing improper resale certificates, filing false or fraudulent sales tax returns, and manipulating the underlying records. California imposes severe penalties and in some cases criminal tax charges. California imposes a 40% penalty if you knowingly collect sales tax reimbursement and then fail to remit it. California may impose a 40% penalty on any such amounts. What starts as a bookkeeping issue can quickly become a high-stakes tax controversy. So how do you respond safely here? Well, the safest responses are disciplined and truthful. You need to produce organized records that actually exist. Whatever you do, don't backfill invoices, don't rewrite ledgers, don't alter point-of-sale exports, don't go creating paperwork after the audit has already begun. In a civil case, that destroys credibility, best case scenario. In a higher risk criminal case, that can look like intentional sales tax evasion. California presumes that all gross receipts are taxable, unless you can prove otherwise. That makes resale certificates critically important, but trying to obtain documents after the fact that do not accurately reflect what happened can create serious exposure in California. Your defenses must be built on what can truthfully be proven. So, when does a civil audit leave the civil lane in California? A CDTFA audit becomes dangerous when the issues shift from just straight-up taxability to your intent. Things like missing records, cash sales that you didn't charge sales tax on, unsupported deductions, and using inconsistent explanations can all contribute to a fraud narrative. At that point, the wrong response may be more damaging than the underlying tax issue. So in closing, if the CDTFA is questioning your records, questioning your resale certificates, or discovered collected but unremitted sales tax, whatever you do, you should act quickly. At the tax law offices of David W. Klasing, our dual licensed tax attorneys and CPAs help businesses manage California sales tax audits, and we minimize civil and criminal tax exposure. Call 1-800-681-1295 or visit Klasing-associates.com to schedule a confidential reduced-rate initial consultation today. You won't regret it. To date, we've never had somebody we've represented in the California sales tax audit criminally prosecuted for California sales tax crimes. Thank you.